traders in the fixed income and FX space say that they expect market participants to close the week scrambling to invest in the few treasury bills available. And I have Ifeoma Onyejekwe, a fixed income trader at UBA, and she joins me for more on this. Ifeoma, so what does this two-day holiday mean for the markets going forward?
Thank you, Kenneth, for having me. For the money market and fixed income space, the system this week was awash with liquidity, and as today stood at 769.2 billion. In this night, OBB and overnight rates have been at single digits throughout this week, closing at 1% and 2% levels. Traders were very hesitant to invest in treasury bills because of the unattractive interest rates. However, we witnessed slight bullish sentiment in the secondary market, especially on the long end of the curve. Because today marks, like you said, the last trading day of the week as a result of Thursday and Friday being public holidays, we expect to close this week as bullish traders as they invest in the few treasury bills available. Because today is also the primary market option where 265.95 billion will be rolled over. Previous primary options, we've seen the Naira cover to be at 4 more than what is being offered. So we also expect, the participation at this auction to be as more, just as the previous auctions that we were. For the bond space, we commenced this week on a bullish note, but it's likely to become bearish. We saw profit taking actions on the long end of the curve, and we expect traders bears to close this week in order to take profit.
All right, but what are your expectations for liquidity going into next week?
Since we've been under no funding pressures, and instead of normal CRR debits, as has been the case last week, we saw CRR credit of about 300 billion, and this week we haven't seen any funding pressures in the market. So we expect next week to open very liquid, and because as usual, people would lose their bids at the primary option, so we expect next week to open bullish, and traders, scramble to make up for bids as financial institutions and also lost bids for their customers. So we expect next week to open very bullish.
All right, but what about the CBS intervention in the market and any chance we've seen some almost bills play out?
No, so because normally we were supposed to have a retail FX option this Friday, because of the public holiday. So we are waiting next week to see if it's going to hold, and if there will be an UMO option, or if there will be any CRR debit. Right now, the market is quite uncertain as to the further moves of the central bank.
All right, but still on the FX space, though, what is the INE window activity looking like, and what can we expect, especially in the parallel markets going forward?
Well, we still have a forex taxi situation in the market, and throughout this week we've seen a very, very, very calm trading session in the forex market. The only activity was seen on the INE market, where we saw the Naira slightly appreciate by about 25 kobo, closing the day at 389.5 from 389.25, and we expect that to continue as the central bank battles stabilizing the Naira.
All right, but on the bond space, though, what's the activity expectations looking like going into next week?
Going into next week, we expect a more bearish action. Basically, we expect mixed sentiments. We expect for people that love this option to trade as both, taking up orders and filling up their customer orders. Meanwhile, expect profitably will try and take advantage of intraday arbitrage trading to make profit for themselves.
All right, but very quickly, though, I'd like to know what your expectations are for the U.S. Fed's meeting happening today.
Okay. So the Fed opened about 13 to keep its benchmark overnight rate in a target range of 0% to 0.25%, where it has been since March 15, in order to continue providing a cushioning effect to the COVID-19 pandemic. And surrounded by what the federal government, what the Fed government, recently called a fix for government certainty, we expect the Fed to likely obtain some new policy action at this meeting. Rather, expectation is for these gatherings to be used to give a more definite structure to the forward guidance by tying policy rate to certain economic conditions such as unemployment rate and inflation pace. So in summary, no rate hike is expected until the unemployment rate shrinks to around 5%, similar to what transpired in the aftermath of the financial crisis and the Great Recession. I also expect the Fed to continue quantitative easing of large-scale asset purchases at the current pace. And also, I don't expect any defense.
All right.
Emphasis on weak demand and the acceleration of COVID-19 cases, posing significant risk to inflation outlook and the Fed's longer-run objectives.